Good morning. It's Wednesday. Oh my God. And I'd say we're in the grips of a considerably dramatic earnings season. We're beset upon from India, the Archegos thingy, and companies that don't know if Q1 was good or bad regardless of the numbers. As we move into the deeps of quarterly reports, we may as well start here and gently segue into the rest. After Tesla's disappointing showing on Monday, Microsoft and Google both did extremely well in yesterday's earnings reports. Google's EPS soaring past expectations of 15.71 to 26.29 cents, as Reuters reports the company's planning a $50 million share buyback. Microsoft shares lost some momentum, probably on overvaluation. But the company's grabbing of more and more cloud business is impressive. Azure grew 50% in Q1, gaining on leader Amazon's AWS quite easily. This morning, Deutsche Bank reported 7.2 billion euros in revenues compared to 635 from last year. Unlike others, Deutsche shied away from Archegos, and well, it's been a good quarter for investment banks. Santander also reported a 5 times jump in profits this morning. Disappointing revenues yesterday, though, from Novartis, Eli Lilly, Starbucks, Raytheon, and GE. They both left the S&P and Nasdaq red on closing. The Russell and especially the Dow just barely managed to end above the zero line. Dow futures are down a tenth this morning, and the prospect isn't pleasing. We're well below the 21-hour moving average, and frankly, within a bearish channel, it would seem. So unless today's earnings are spectacular, well, later we'll see. Earnings from Apple and Facebook, Shopify and Qualcomm, Boeing, General Dynamics, Ford, and eBay, while Europe has Lloyd's reporting alongside Dassault, Carlsberg, and GlaxoSmithKline. Just choosing from among all these goodies is a full day's work, so you should probably get into your fundamentals in a hurry. We will tell you that Apple is about to be hit with antitrust suit in the EU on its App Store blocking rivals. That fine could cost them up to 10% of their global revenues. Otherwise, in the US, the dollar is slightly up after February house prices added a tick year on year to 12.2. The Red Book is also up 0.5%, and the Consumer Board yesterday presented a shining consumer confidence report for April, up to 121.7 from 109 the month before, which is a 14-month high. Later this morning, we'll be able to see mortgage applications and rates and retail sales from both the U.S. and Canada at midday. Then at 6, the much-awaited FOMC interest rate decision and statement. We're not expecting much in the way of policy changes. The Fed doesn't seem to be all that pleased with the economy's recovery so far. Unemployment down and inflation up, but neither nowhere near the mark. And finally, the SEC just may be lending some scrutiny to the SPACs delight that's gripping Wall Street. These are blank check companies that buy another company for the purpose of taking them public. Apparently, their projections are a bit too rosy, and they're putting both companies and investors at risk. SPACs have raised a whopping $263 billion this year so far, according to Reuters. European indices ended mainly down yesterday, although earnings weren't too bad. UBS revealed a hard $774 million hit from the Archegos meltdown. Currencies didn't do too well over the Asian session either, and again, despite picking up data from Italy and the UK. The former's trade surplus in March grew to 4.8 billion euros, and the latter's CBI Trade Survey Index sprang out of March's minus 45 into a positive 20 points. The CBI basically measures the health of the UK's retail sector and consumer spending. With yesterday's company earnings in the US and Europe less than spectacular, Asian equities are kind of mixed this morning, excepting the ASX, which seems up on a weakening Australian dollar. Overnight, we saw some concerning drops in CPIs down under for Q1, and there's not going to be much respite until tomorrow at 1 a.m., when we'll be seeing imports and exports from both there and New Zealand. Retail sales in Japan are a very bright spot today. They soared by 5.2% in March after contracting for the past 5 months. Japan's government overnight said it was allocating the equivalent of about $4.5 billion to small businesses as a pandemic lockdown hits Tokyo and 3 other regions. And India simply can't catch a break. As COVID continues up, we're seeing 3 earthquakes in the Assam district. But the Nifty continues up. Goldman Sachs yesterday published a report showing that blockchain stocks were by and large outperforming the S&P 500. Their basket of 19 blockchain tech-exposed stocks added 46% year-to-date versus 12% for the benchmark. Companies chosen were with a market cap of at least $1 billion each. Oil got just a touch of a cold shower last night when the API reported another 4.3 million barrels added to national reserves. It's been edging up now for the 6th day in a row, except that bit of uncertainty Sunday when the Indian shockwaves hit the wires. But we see the commodity yesterday crossing above the central pivot with R1 in easy reach. Later this afternoon, we'll be hearing what the EIA has to say about it all. Whew. Well, it certainly didn't start out this way. I simply got up a bit earlier and barely made the deadline. Have a great trading day.